And my name is Prashant, and like it or not, I'll be your MC for the evening. Before we get started, may I request you to put your cell phones on silent mode? So let me get started with a brief introduction of who we are. So we are part of the New Ventures Committee, the 4 names that you see up here. We're part of the New Ventures Committee within the HBS Club of Singapore. And our mandate is to figure out ways in which HBS alums can contribute to the startup ecosystem in Singapore. That's primarily the mandate. Today's event is in line with that objective. And we plan to have at least a few of these in this coming year. We also run strategic deep dives. That's the second format we run. We have strategic deep dives with some of the mature startups. As part of this, the startups write a case study about themselves and list out some challenges they are facing currently. We then pair them with our alumni who have the requisite experience to help them address those challenges. So if you know of any startups that could benefit out of this, please reach out to us, and we are happy to put together a small session with you. Secondly, I would like to take this opportunity to thank our sponsors, the SMU, which sponsored the beautiful venue here, the HBS Club for sponsoring the food, and Paneco.com for sponsoring the alcohol. Paneco is also sponsoring a lucky draw at the end of the panel discussion. So please make sure that you have your name card in that box and stay till the end. So that's the second part. The third part is there will be a Q&A after the panel discussion ends. And please feel free to ask questions during that time. But please make sure, and may I request you also to make sure that your questions are concise, relevant, to the point, and less than 15 seconds. So that's what I would like you to do. So without any further ado, let me start introducing the panelists. Seated on my first side as a part of the panel member is Cherilyn. She's the CEO and founder of Asia Law Network, which is the only legal marketing platform approved by the Ministry of Law, Law Society of Singapore, and Spring Singapore. So she's an SMU alum. So welcome home, Cherilyn. Next to her is Joel, and he's the founder of Fave. Joel is the founder of Fave, and before this, he was one of the initial founders of Groupon businesses in Asia. Sorry. Joel has received the Ernst & Young Entrepreneur of the Year award and was awarded the title of Entrepreneur Par Excellence by Malaysia Tatler this year. Next to Joel is Rameez, who is our also fellow alum, and who co-founded Circles.Life, manages a portfolio of growth private and public equity investments under Sukun. Prior to this, he spent years at Temasek and the Boston Consulting Group. He studied at the National University of Singapore and has an MBA from the Harvard Business School. And next to him is Warren, who's the general manager of Uber in Singapore, and has been instrumental in launching Uber in many geographies in Southeast Asia, in Asia, and across the globe. Moderating today's discussion is my fellow alum and partner in crime for this event, is Tanvir. And before we get started, someone once said that there are no $1 million ideas. There are only $1 million execution. So let's hear from the panelists as to what they have to say about this. And so without any further ado, over to you, Tanvir.
Thanks, Prashant. Panelists, thank you so much for being here today. It's a pleasure to have you. Before we dive in, I just want to lay out a brief roadmap for today's discussion. As you can see up there on the slide. So panelists, we would like to understand something about your unique personal background before you decided to prepare as a founder. We would like to understand how you came up with the idea and decide how it was worth putting in all the effort. Then we would like to move on to how you built your team, some of the decisions around early hires, how you thought about those guys. And then, as Prashant said, we would like to learn how you did that $1 million execution. Later, if we have some time, we would like to talk about just the startups market in Southeast Asia and some of your views around that. Okay? But before we start with our first question, there's an audience trivia. Amongst us on this stage tonight, who is a former model? The usual suspects, Cherilyn, Joel, and the moderator. I didn't make the slide, but yeah, the moderator. Okay, so let's just take a poll. How many of you think is Cherilyn, the old-fashioned way of raising your hands? It's like 20.7%. How many think is Joel? Wow, that's 70.2%. Okay. Okay. That's the answer. It is Joel. All right. So Joel, you seem to have a good career in modeling. What happened?
So, all right, what a way to start, the panel discussion.
Welcome to the HBS panel.
Let me distract everyone. There's a reason why Rameez and I are sitting right in the middle, because you got to keep the Uber and the legal folks away from each other for now, right? Because obviously I'm still using my Uber, and hopefully they never settle the problem, so I can continue using it. So I was a model when I was in university, right? So obviously it didn't last. Here I am, slogging out every day trying to make ends meet. So maybe I just share a bit of background, right? So my parents are both educationists. So my mom teaches in my school, and then look at me as an Asian guy. Education is really important, right? So you gotta study, you gotta get 100, 98 is not good enough. You gotta get 110 from mathematics and English, right? So I kind of grew up in that background. And when I was in university, I was curious, right? I was studying engineering. I was curious about business. I sneak into business lectures to kind of figure out, okay, how do you write a business plan? Then I wrote one, and I started a company without telling my parents. So that's kind of how it all began for me. So when I graduated, my mom being a teacher, she kind of photocopied my certificate and started sending it out to companies for job applications. So she's trying to get me a job. So I got 2 interviews, which I didn't go. Then I saw that my mom was always watching TV. That was in 2006, right? So when YouTube hasn't killed TV, right? So my mom was still watching TV every day. And I thought, okay, there was this TV show called The Apprentice, right? So I thought, okay, that's a great way to get in front of my mom, right? To teach her what I'm doing. So I joined that TV show. So it wasn't sponsored by Donald Trump. It was Tony Fernandez was that Donald Trump. And then I was fortunate in that 12 weeks, I somehow won the TV show. So that was where I got my license to be an entrepreneur from my mom. So ever since then, I've built a couple of companies. So one of it, we built the largest digital media company in Malaysia. We sold it to the largest media company. So kind of like SPH of Singapore. The second, I built the Groupon business across Asia. So there was a lot of ups and downs in that journey. So kind of happy to share if you guys have any questions. So we built it within 4 years from $0 to $2 billion across 12 countries. And then thirdly, I'm building up a startup called Fave right now. So it spans Malaysia, Singapore, Indonesia. So we're kind of driving mobile payments, rewards, and loyalty.
So you're saying it took you 3 startups to learn how to do Fave right, is it?
Well, I think every startup is actually different, right? So there are different challenges, different opportunities, value proposition, and timing is also different, right? So I think in a startup cycle, it depends a lot. I think a big part of it's fundraising. So, I think we're just joking around, right? How do you build a successful startup? Is to make sure that, you've got $2.5 billion, right, in your cap table. But I think it's all different challenges and opportunities. I'm kind of happy to discuss more over the next.
Sure. Let's go to you, Cherilyn. What's your unique personal journey to get here?
Okay, just a quick background. I grew up as as the only child, so I used to spend a lot of time alone, right? And in those days, my mom was really forward-thinking, so she bought a computer that she never used, and she left it at home. And so I spent a lot of time at home with the computer since I was maybe 3 years old. So I learned coding, I learned a lot of things even before I got to 12. So C++, Visual Basic, everything, right? And those days, there's no Play Store, no Apple Store. There's nothing you can do to, upload your things and let people use them. So it kind of got stuck there and never went further. But then after that, I got into accountancy in SMU, and I almost dropped out. It's kind of a startup journey, right? But I spent a lot of time doing social entrepreneurship here. So in 4 years of my undergraduate, I basically spent my time learning how businesses work in the worst difficult environment. I wouldn't say worst, because in social enterprises, they have to deal with a lot more problems than in normal enterprises. So I thought, hey, what's the best way to learn about businesses is to actually go to the worst scenario you can be in and actually learn it from there. And then when I graduated, I got really interested in design thinking. So I went to Stanford, did a boot camp in Stanford for design thinking. And I realized that actually everything that I believed in my life was actually basically there, right? About thinking about users, thinking about where problems really are, thinking about how today's systems are so different from yesterday's and how we should continuously look at problems in a different light. Because the problems that we can solve today are so different than yesterday's, right? Then after that, I basically won a business case competition, similar, right? That was from INSEAD and Pernod Ricard. So I started F&B. That journey actually got me to realize that you gotta love the industry you're in. So F&B was something that was very trying, and I decided that operationally it's just too heavy, and it's not something that I'm passionate in. I'm passionate about efficiency, about getting things done fast. So then I moved on. Although we're making a lot of money, I decided, it was time, the time that I'm wasting on that journey was too much, so I moved on. And I did something even more silly, right? So with the money that I earned, I actually bought into a creative agency that was making losses because I wanted to turn it around. And I saw the opportunity to turn it around because I did pitches and stuff even before I bought into it. And I was winning them. So I was like, hey, I could do this, right? So I was 3 years into that creative agency, turned it around, and started to make money. And that came to a point. The turning point came when someone asked me, hey, can I put $5 million into your company? And there I was thinking, okay, so what am I going to do with $5 million? Can I grow it? Can I grow 5 million into 50 million? And the answer at that point in time was, no, I can't do that. Because in the creative agency that I was in, it was very human intensive. And it's always about ideas, right? Pitching continuously. So that was when I decided I need to move on.
Sure. Okay, let's move from the beer side of the table to the water side of the table. Rameez. Why don't you go next?
Yeah, so, some people say, greatest entrepreneurial ideas come through, this sudden revelation, sudden passion, woke up one day and then sort of, you have that idea and it becomes $1 billion business. So that was not me. I think for me, I would say that it's been more like a simmer of something. It's something like curiosity, but it's also something like I want to do something. And you're naive enough to keep thinking that that's a good idea. So, the first thing I ever did actually, partly in college and also right after graduating, was actually join a startup as the 6th, 7th employee of that company, which had raised about $10 million, which was a lot of money actually back then. And they used up all that money in about 1.5 years, and they went under. And the only thing I remember from that experience is it was actually absolutely an amazing experience. And I saw people really being their best, and every single person in there eventually went on to do great things. So that left something for me, I guess, in some ways. I also recognized that at that point in time, this was some time ago when, startups was not cool at all. So, then I had to go to the dark side for a long, long while, where I did consulting and, learned a lot of things. And I did, investment management. But I always realized that, there was this simmering feeling inside. And I wish I could say one day I woke up with a revelation, but I didn't. It was just like a very gradual, part of it is about solving a problem. Part of it is about, I wanted to actually build a workplace where I would enjoy working. And it's a weird thing because it had nothing to do with a business that I wanted to do. It could have been in anything. But I just wanted to, I think just based on my own experiences, I thought that, if somebody spends 2/3 of their waking life working, right, then it's so wrong that people for all these time are just generally frustrated about where they work, right? So it's kind of like a weird thing. But then I said, if you want to take on a big problem, you'll have to build a team. And then when you build a team, you'll actually be able to provide a place where they can actually grow and really just enjoy it, So that's part of the reason. Now, how do we end up doing telco is kind of, since I've left Temasek, I've actually invested or being partly involved in a bunch of small businesses where I took part, sometimes as a part operator, lost a lot of money, sometimes invested, lost a lot of money. So I learned a lot by paying a few more MBAs along the way. And so, yes, so eventually for me, I had the benefit of all these learnings. Why telco eventually is because, if you, for me, looking around the world, there's many big industries, but there's few industries that touch everything. Transportation is one, retail is one, but healthcare, banking, they're all one. These kind of industries that touch everyone. But when I looked at it from a consumer experience point of view over time, in just telco, it was just ridiculous how bad it was, the customer experience. And I also looked at balance sheets while I was in investments and looking into telcos, how much money these guys made. So almost with a sense of righteousness and a lot of naivety, because obviously you don't know what you're getting into, I think this was the approach really that got me into it, and that's why we're here.
Sure, Rameez, I want to follow up on that, but let's get to Warren. So Warren, Rameez is saying this investment banking, whatever it means, is the dark side. So what were you doing on the dark side?
So I was in the darkest of the dark side. I was a trader, so yeah. But I won't pretend to be a founder, but I really admire these guys because they raise the hundreds of millions and billions of dollars that people like me go out and spend. So I was one of the sort of original members of the Southeast Asia business for Uber, basically being a jack of all trades, trying to figure out problems, backed by analysis and some business savvy. So I think my career path was very, very disjointed. I studied engineering in college. I got a master's degree in bioengineering, a very different area of engineering that I studied in college. And I worked at an incubator, I worked at an angel investment fund, and I did trading for several different types of products in different markets for a few years as well. But all along the way, I guess the common theme was that I had a very short attention span, and that after 6 to 12 months after that initial adrenaline rush of learning a new skill or learning a new market or learning a new business line, I just had to get my hands dirty and learn something new again. So when I joined Uber, they were just expanding in this part of the world, and I wanted to do something completely opposite of what I was doing as a trader, which was sort of sitting in front of the monitor every day, monitoring my Bloomberg chats and all my trades. So that was sort of the common theme. Is it didn't really make sense until after I joined Uber, looking back and trying to connect the dots, but I think the common theme was just trying to find new problems to solve.
Thanks for that. Okay, let's move on to the next section, which is how did you come up with the idea? So let's start with you, Rameez. So you said you had a pretty good role in Temasek and you were investing in some other MBAs, but who in his right mind would go against the big telco?
Yeah, I still wonder about that actually. So going back to what I just talked about, right? I think just telco seemed like one of those fundamental industries where, from a consumer point of view, really, really backward. I mean, customer experience, nothing compared to what you're used to dealing with an Uber or a Netflix or a Spotify. Your consumer experience of getting that service is so different versus what you're used to every day. And then when you look at the amount of money you actually regularly pay as an absolute need, it's also, that's very few things actually require you to pay every month and month. And then when you looked at the technology stack behind the telco industry, you realize that it's something, I remember it was the coolest thing in the world when I first made the call without, actually having a wire attached to it, or I saw someone making that call. And an industry that was so on the edge of innovation can be so backward when it comes to innovation right now. So for me, that was just a shocking set of sort of facts. And then you look at the supply side, right? So this means there's got to be something going on. A lot of money being made, touches everyone. The technology is super backwards, has not been touched for ages and ages. And when you look at the supply side, you actually can, compare that to banking. You can see, you pick up a rock and you can see 100 fintech companies. Nothing against them, but I'm just saying that, I think people are aggressively competing. Maybe it's just started earlier. But I think when you looked at telco, you can't name 10 companies that are actually disrupting the space globally. How could that be, right? And for me, that sounded like, that's interesting. And then, of course, when you go talk, despite the experience and investments and everything you have, everyone tells you that's a stupid idea, right? And, that's very hard, but also that's also interesting because you can say, if everyone literally believes it's a stupid idea, maybe there's something here, right? Because there can't be something so broken with nobody trying to solve it, and maybe there's an opportunity here. But it's very easy to say it now. It's much harder when you're sitting in front with all that experience and going on to people, and then everyone disagrees.
Yeah, no, let's follow up on this a little bit more. So in his book 0 to 1, Peter Thiel specifically recommends do not disrupt. Basically, his argument is that don't go against the big guys to begin with. You try and somehow just expand the market and capture some of that, and then go from there. Why are you guys hell-bent on taking on big telco from the very beginning? And you can see already, there are similar plans to yours. You came up with this 20 for 20, 20 GB for 20, and Singtel has the same, M1 has the same. So how do you plan to take on these big guys?
Yeah, so I think in some ways when you're dealing with a very capital-intensive industry, I think you have to trust the guys, and I hope nobody's here from well, it's okay, we can still talk if you're here from the telcos. But I think you have to somehow trust them to take their time, right? And I think, and it's not something because we're special, it's because it's hard. It's a hard problem to solve when you are a publicly listed company. You've got earnings every quarter, and you've got a certain revenue structure attached to everything you do, and you can't change anything there. And then when you look at the technology side, you've got 5-year vendor contracts, and the only vendors in the industry are actually elephants themselves who want to sell you 20-year vendor contracts, right? And because you're a monopoly, you don't really have the burning platform to change anything, right? That to me is a perfect recipe for being slow. Right? So, and if I was in that place, I would probably be slow as well. So in some ways, when you come to these really big industries, I think there is an interesting element where you can essentially, you'll still grow as a small niche player and go on to take more and more, like we've done now recently. But I think what keeps me awake, frankly, is someone like me coming out and trying to say we want to do the same thing. What scares us is, so for example, Google Fi is trying to do a project that is in the labs for a long time, but what if Google Fi comes out to say, okay, now we're going to start taking over the space? That scares me more than a big telco saying what they've been saying for the last 5 years, that digitization is important, we want to create a digital telco, we want to create a new brand and things like that. And hopefully in that time, we can build that competitive advantage with enough time frame ahead of us, because eventually everyone will get it. In this day and age, I think it's very hard to say that just because you have something special, it's going to be special in 2 years or 3 years. So the whole idea is that if you can build scale before that, before they finally wake up and realize what's going on. But I think one thing is when you're going against something like this, the one thing you have to understand and actually talk to your team all the time is just you have this urge to compete directly, and you shouldn't. Maybe for Uber and others, it's easy to compete directly, but they just can't do it. Like if I start paying $500 for a subscriber to get a subscriber on board, that's the easiest competition Singtel can match, right? Because they've got a huge, in this case, the arsenal is like 200 to 1.
Fair. Let's come to you, Joel. So you've built so many startups. What are the kind of things you look at, and how do you decide that this is the idea where you want to put a lot of effort behind? Let's talk from the perspective of your most recent startup, Fave.
Yeah, so when I kind of look back in the past maybe 12, 13 years as I was building multiple startups, I think it's a component of 3 things, right? So idea, people, and capital. So in the first 2 years when I first, in my first startup, I was very passionate about ideas. So it's like, oh, I got this idea, I got that idea. Every day, even in the toilet, I'm coming up with 100 ideas, right? So I don't know if some of you kind of resonate in the same way. And I feel like all these ideas are so valuable. I'm not going to tell anyone. It's almost like Lord of the Rings. I'm like Smeagol. So my precious ideas, right? So I think I kind of struggled in the first 2 years when I was out of college with ideas, right? And then at some point, I realized that it's not worth anything if you don't share it, right? So I started to share with people, and that kind of built the people component piece, right? So I started to get some interesting people to come on board. One of my initial founders, his name is Kylie, so he runs a 500 startups fund today across the region. So both of us kind of came together and started even more ideas. Yeah, he's got even more ideas, right? I had 100, he had 1,000. So we had 1,100 ideas, right, to kind of build. I think then that's where reality hits us, right? Where a lot of it is that the ideas needs capital to actually to kind of grow. So the thing with like Asia is that investors generally like to invest in things that are somewhat proven somewhere else, right? I mean, as much as we are like highly innovative or we want to be creative, but the capital is always invested to like, hey, I'm building the Instacart of Southeast Asia. Okay, that's great. 1 million for you, right? If you say like, I'm gonna solve the problem of allowing everyone to express themselves on the internet, right? Then you get $0, right? So essentially that's kind of how investors are in this region. So what I find is that, and maybe things are changing, but I think it's still quite similar at this point, right? Where like a lot of investors today, early stage, when they talk about seed stage or even pre-seed stage, there needs to be some comparable, right, to what you're doing. So I think it's good to maybe start with something that is somewhat proven in another market. The idealistic part in me was battling that for many years, right? Then I came across this link on TechCrunch. It's called the date pool, right? So on the date pool, there's 10,000 of companies that have died, right, with all their ideas. So then when I searched through the date pool, I realized, shit, actually some of my 100 ideas are in here too, right? So maybe the investors are not, so, like, it's not like they're lazy, it's just that a lot of it is unproven, right, till at a certain stage. So, but then at the same time, starting with an idea that's proven is good, but after a year or so, typically investors will start to ask, hey, how are you guys localizing this? That's a big question, right? How are you so different, right? So now that's the point where a lot of investors call it mutants. So you kind of start with a clone, right? And then you evolve into a mutant, where you have a somewhat part of an initial idea, but then part of it is like now mutated into serving local needs. So I think that's a good combination for fundraising and building it.
Cherilyn, do you agree with that? You need an idea that has been tried somewhere else before. I mean, you don't seem to have such an idea, and you talk about how you set a vision for this, how you built a story around this, and how you communicated this story to the investor.
Okay, so for me, it's slightly different. It started with a problem I wanted to solve for myself. So remember, we're at the point where I was trying to sell my creative agency, and I needed people to run through my documents. And that's not just at that point. A few times before that, imagine when I was buying into the agency, I was looking at legal documents. When I was exiting my F&B, I was looking at the legal documents. And many times in those times, if I had proper legal advice, actually I would have done so much better today. But of course, when you're thinking back, you're like, okay, this is pain enough for me to solve it. So at that point, I needed lawyers to help me take care of documents of the sale of the agency. I needed to actually draft the will. So when you start, accumulating either assets or debts, you need to start protecting your family. So that was a time where I started to find a lawyer. And then when I Google for a lawyer in Singapore, I realized that I can't find someone that I can trust on Google. Okay, so if it is a question that Google cannot find an answer for you, maybe it's big enough a problem to solve. And that's where I went on a 1-year journey of looking up and researching the legal industry, talking to lawyers, talking to the who's who in the legal industry, talking to businesses, talking to consumers, and even lawyers themselves have the problem of finding other lawyers for their family. So that's when I realized, hey, this problem's not isolated to me, but to everyone. And that's where I set the vision of actually having to have the fastest method of linking someone up to a lawyer whom they need, okay, in the shortest possible period of time. And of course, like you mentioned, there's always, your ideas are not new, right? This has existed in the UK, in the US, and Australia for a long time. But how can we make this work for the Singapore market? And
sure. Yeah, I also think there's an element of B2C versus B2B here. You are sort of B2B versus all these guys who are in the B2C space. Okay, I think in the interest of time, Warren, let me move on to you, but move on with a different question. Well, Not yet. Okay. It's a section around building a team. Okay, and that's what your key role was here. However, Uber has been in the news for all sorts of wrong reasons. There were issues around gender discrimination, harassment. Frances Frey, who was one of the HBS professors, was hired, and I was listening to one of her recent HBS podcasts, and she said the culture was very toxic, and you could be a jerk at Uber, and I'm quoting this, and can get away as long as you were a top-performing jerk. So, did you observe some of these issues when you started, and how did you think about building a different culture if you did? These things were not out yet, when you started in 2014.
So I think the thing about Uber is that we're super decentralized, and we're very autonomous in each of our countries and cities. So when these headlines of there's a bunch of jerks at Uber, there's a toxic culture, a lot of that was in HQ. I think it's arguable. Maybe some people might have found our founder to be one of those guys, but I think it really sort of reflects the local leaders and the culture that they build. So I think out in most parts of Southeast Asia, at least in Singapore and the markets that I've touched, we haven't really had that type of culture. But I think early on, we've been through many different phases of the company. I think in the early days, when you're in a hyper-competitive space, you're against all odds. You're essentially, to enter markets, you have to break rules. You have to fight against taxi. You have to fight against very violent, corrupt incumbents. So we do have a chip on our shoulder, and I think that sort of breeds this feistiness. And our founder was sort of like the epitome of that type of feistiness. So I think you take the good and the bad with that, and I think part of that was some of this feistiness would become part of our internal culture as well. But looking back, I think we may not have gotten to where we are without that type of sort of aggressiveness in the beginning. Sure, we may have sort of overshot and had to pull back a bit because of that culture. But I think what we're doing now is sort of rebuilding with a new CEO, with expert managers. One of the things that I think that I witnessed was that in the sprint for growth, you usually put your smartest people in management positions without any training, expecting that they can figure out management because they're smart. But management is a very different type of skill set. There's all types of EQ. There's all types of SQ, how to give feedback, how to receive feedback, all those soft skills that, it's the smartest people with, only a few years of work experience might not have sort of just inherently. So I think that is a piece that our company missed out on, is sort of training and preparing and allowing high individual contributors or very strong individual contributors to become managers. So this is an area where, as we become a bigger company, there's a lot more, patience to develop talent and to give them the management training and education that they need to enable their entire teams to thrive. And this helps to avoid some of this sort of toxic culture stuff. So I think looking back, I think that was one of the areas where the company kind of underinvested in.
But what do you look for when you hire people for your own team? You started in Indonesia, then here, built up from like almost ground up. So early hires, were you looking for these smart guys, or were you really looking for these people with soft skills?
I think in our business, in the early days of Uber in this part of the world, we try to hire very, very lean teams. So the way I approached it, I think each of the launchers, I was initially a launcher, each of the launchers had a very different sort of hiring strategy. What I looked for was a combination of IQ and EQ, more a ratio than purely just hiring someone based on raw intelligence, because there's so many different types of challenges that come along the way, so many different pivots, and just many different types of situations that individuals will be placed in, and they'll have a lot of responsibility. and they'll need the EQ to be able to handle those situations and make the right decisions. So I think that type of combination is definitely, with a problem-solving attitude. I like to call them athletes that can plug into many different types of situations or roles. Those would be my ideal sort of team members in the early days of a launch.
Sure, thanks. So Rameez, staying on this early employees question, you have co-founders. Talk to us about how you manage conflicts. These are guys you've come together around a vision. I'm sure you have different ideas about different things at times. How do you manage conflicts, and how do you basically decide on roles and responsibilities, and basically don't step on each other's toes?
Yeah, I think first to start off, I think you should step on each other's toes once in a while. I think that's good. So I think that goes to the core of why sometimes. So just taking a step back, right? So there's some research, and I think well, it'll come up later. But around founders that have actually two founders tend to have better success ratios than single founders actually. And then there's also some study that if that number goes above 3, then it's complicated. But there is some sort of a sweet spot. So I'm saying this because I actually genuinely believe it. It might not be actually true. But the first thing it starts with is actually saying that actually there might be a benefit in actually having a co-founder to your success ratio. So I personally believe it. And somebody else may not. But I think if you're going to be with a co-founder, you better believe it, right? So that's the first step. Because it helps, it helps in the journey to have someone in the toughest days, to be feeling slightly more positive than you, right? Because it's that thing that matters at that day, right? And also in a discussion to give us something that is completely different to what you have in mind, right? So in that journey, I personally believe that I think there's a benefit to actually having a co-founder situation. The second thing is, but when you bring two strong individuals into a very uncertain situation that grows fast as well, besides the benefits, there's always conflicts actually. And you have to break those conflicts down into two things, and you have to decide whether this is right or not. The first thing is just at a very fundamental level, do you believe that you respect the individual for the intellect, for the soft skills, for what they can add to the process, whether they believe in the vision or not, whether there's someone who you can absolutely trust completely, almost like a marriage, but almost with like financials and things like that. Now, I think if you've got a doubt, and I say if you've got a 1% doubt on that question, don't be with that co-founder. And that, if you have that doubt, it's eventually going to lead to a really bad situation.
But what if it comes later? So you've already married now, and in a year later you start having these doubts on the person's intellect or certain
So as with marriage, there are only two options. So you will eventually go to counseling. I think the most important thing is communication. So right, I think if you realize that this fundamental, I would advise that you break off that thing. Right? If you've got some fundamental issues on those questions that I talked about, I think that there's just no negotiation on that. I think, and I've seen tons of people, and I've personally had a situation before this where I don't think, I sort of, because when you're starting off, you sort of say, oh, it's going to be okay. It's kind of like, I know the situation, but I know it's not going to happen like that. Well, if you think it's probably going to happen, it's probably going to happen, right? And it's such an intense, uncertain environment, it's going to happen. So again, even if you find that out later, I think you should just let it go, right? Just get out, because there's just no end. And this is a very strong opinion, but I think I've personally experienced it, and I've seen like tons of cases that go along that path. Now, there's the other set of issues that happen, right? I think what is, personal situations of a founder could change. Right? They just may be just exhausted, after the second, after the third, after the fourth year. And I think what's important is that you continue to communicate all the time with them, right? And I think this is something that we learned much later, for example, that, we actually, so we actually knew each other, but then realized that in the day-to-day business, we just lost touch completely, because so intense, and it was so intense all the time that all we were talking about is work. And we absolutely forget that there's other part of this life where we valued each other, and then it's important to connect at that level. So we, in an almost structured way, we brought back hanging out. And it felt really weird, actually, that, it's like, okay, now we have to schedule a calendar invite so that we can hang out together. It's kind of like really weird. And you're really busy and you're tired and it's 7:30 and at 8 p.m., whatever, and you're saying, no, but we agreed we're going to hang out today, right? But my point is, the first few times it feels a little hard, but I think unless you have that soft relationship, you're just not going to work together as a team. So the one advice I would say is, A, just don't have those fundamental values issues, just like as in a relationship. Even if you find it out later, let go, right? It's a hard decision to let go immediately. Like if you think you've got work ethic questions on a person, just don't work with them, right? It's not going to get solved. So on the other stuff, communicate a lot, and outside of work, try to find a very strong basis of bonding, even if it means, for example, doing something on a Saturday and helping out, going together.
Sure. Cherilyn, you want to say something?
Yeah, I just want to add that I learned from the lawyers. If you get your shareholders' agreements right from day one, actually it kind of forces you to go through those values questions a lot earlier. So you iron out your issues like way earlier. So when something happens, you know exactly what to do. So what kind of shares are left on the cap table? What's the involvement of this guy moving forward? And I do agree. Like I think even for us, we value the hangout time. And we basically had to structure it inside the team so that we have these time to know each other as a person. The key to finding your co-founders or anybody that you work with is to realize that everyone is on this journey of self-discovery as you go on a startup journey. I think no one really knows or can expect what goes on when you go on your new business, right? Whether they're still interested in this vision 3 years from now, if, for example, you have Google who comes into the picture suddenly and tries to play in your game, right? So the idea is to keep your minds open and realize that this other person you're working with is also discovering who he or she is in the business, and to have a way for them to step out if they wish to, in a mutually beneficial manner.
Joel, I want to get to you. Since you have the benefit of so many startups, have you made any bad hires, early on in any of your startups, and what did you do about that?
Yeah, so maybe I just want to add on to that point. Maybe I have a slight addition, right, on that. So I find that, I think how you describe a founder relationship is almost like a relationship. And then sometimes the longest relationship I've ever kind of experience is my parents, right? They've been married for like 35, 40 years. So the biggest argument my parents have a lot of times is that, so for example, my mom is really into like the home and my dad is not, right? But when my dad makes decisions on the home without consulting my mom, that's when she gets really pissed off, right? So it's almost like a very strong, and my dad has a very strong preference to cars, right? So he has got to make the decisions there. And I think co-founders have that sort of relationship as well, in which I recently had a conversation with mine, and he said, hey, do you actually trust me completely? I said that I actually trust you in everything except this area, right? Because I think being transparent, and because, for example, like he's a great operator. I wouldn't trust him to dictate how the product vision is going to come up, right? And I want to be upfront with him and tell him, hey, this is the area that I don't trust you at. And similarly, he may not trust me completely in this area, like trying to figure out the operational details, right? So I think maybe it's also kind of breaking down trust into different areas, because I think every good co-founder actually has opposing strengths and weaknesses. It's actually like a jigsaw puzzle. And the reason, and a lot of times I think opposing co-founders are actually perfect because you actually kind of delegate, right? So my mom and my dad now has come to the situation where everything the home, my mom decides, everything car, my dad decides, right? I think similarly in my co-founder relationship, I worked for 7-8 years. We argue, but we know where the lines are drawn, right? When it comes to decision making. So I think that's one.
Do you have a shareholders agreement?
So the thing is that, okay, so I got differing opinion on that. I mean, I've never taken out my shareholders agreement from the day I signed it, right? And I find a lot of times you take out agreements only when it's usually negative, right? So usually, right? Whenever there's a scenario that's less positive, then boom, it comes out, right? What is the penalty for certain things, right? So, I think trust is really important, but I think drawing the lines, right? Like who's responsible for which area, I think is even more important as the relationship grows.
Sure, bad employees. I want to ask you about that.
Bad employees, right? I guess the question a lot of times, people say, oh, in a startup, people is most important. Then the first question I ask is, how much time do you spend interviewing candidates? Right? I think that's a lot of, and for our organization, usually we have to interview 10 candidates to get one good one, right? So, back then when I was kind of growing the Groupon business across the region, we had 2,500 employees. So we probably went through a cycle of interviewing 20,000 people, right, in that process. And I'm sure it's similar to like Uber or Grab. When you're scaling at that pace, like the head of people is actually the most important role in the initial stages. It's not really the CFO, usually in the first 18 months, it's actually the head of people. That person makes a big difference whether the company builds, like great talent or not. So, and whenever you kind of find a bad employee, the first thing I think about is that I would actually not call the person a bad employee. I think it's just a misfit, right? Because I don't think anyone is bad in general. And a lot of times I think when we think of it as a bad employee, then our managers feels they don't want to make the firing decision. They feel it's negative, right? But I think it's positive to let someone that's not a fit go because we are actually taking that person's opportunity away. Similarly, someone else could be in that role. So it's actually positive to let people go because they can actually realize more beyond this organization. And as an organization, we get the right fit on board. So I don't think anyone's bad in general. I just think that a lot of times it's a misfit. And the faster we fix it, the faster, more proactive we interview candidates, the better, right? So I think that's kind of how I think about it.
Okay, let's move on. I think before we move on, there's another trivia, just to lighten this a little bit. It's getting a little intense. So the question is, how many unicorns do you think there are in Southeast Asia? Let me first put it to the panelists. Warren, what do you think? How many unicorns in Southeast Asia? Your options are 3, 5, 7. Make it simple. Let's just get to you first. 5? Okay. 3. These are the top founders in the region, guys. Yeah. 5. Southeast Asia. Southeast Asia, Asian unicorns. Southeast Asian unicorns. Simple question. Okay, 5, 7. You want to change 3? You want to stay with 5? Let's get some audience answers. How many think it's 3? Oh wow, this looks like again 27.3%, something like that. How many think it's 7? That's quite a big number. And 5? Are some of you raising your hand twice? Okay, the answer is it's 7. Grab, Traveloka, Tokopedia, Gojek, the SEA Group, Lazada, and Razor. Before Redmart was acquired, we could have counted 8. Okay, so the founders got it wrong, except you when you change your mind about your answer. All right. Sorry about that. Okay, let's move on to the execution part. So you have this idea, and now, as Prashant was saying, there are no $1 million ideas; they are all $1 million executions. So let's start with you, Warren. So you were up against Grab pretty early, right? By the time you joined, Grab had already entered the market. So how did you go about setting your goals and matrices? Especially, how did you make sure that you're not either being too aggressive or being too conservative?
Yeah. So I think this is, again, depending on what phase of the business you're at. I think like from day 0, you're just trying to figure out how to grow your business. You don't really care what the competitor's doing. You're dealing with regulators, you're dealing with taxi, you're dealing with taxi mafia, you're dealing with all these different constituents and figuring out what the right product market fit is. Sure, you might take a peek over at what they're doing, but I think in the early days, given that our product is centralized and all of our engineering is centralized, we're trying to cut and paste as much as we can and adapt around the edges. I think that strategy kind of hurts in the long term, but in the short term, in the beginning, you're not really focused on the competitor. You're just trying to grow the business as fast as you can with whatever resources you have, what you can scrape together. At Uber, it was kind of build it and they will come. So you build it and then the resources will come once you've proven that you can get to a certain size. So that's sort of where all the scrappiness, where all the ingenuity and the creativity and doing all these local initiatives really sort of, I think in the early days it was using our UberX platform of tools to onboard in Indonesia scooter like two-wheelers. And it was not a customized product at all. It was just a new vehicle view, as we call it, to adapt to this form of transportation that people use locally. So early on, it's really nothing about what the competitor is doing. It's really about scraping whatever you can, growing as fast as you can, so you can go back to HQ and ask for more product or more money. I think in the later days, once you reach the scale, once you've created this category already, and there's lots of users, and these users are moving between these platforms, we call those dual appers. I'm sure there's a lot of you in here. There's a lot of promos going around. But that's when you start looking at market share and sort of week to week measuring it, competing for it, and also looking at our efficiency. So we look at the per trip efficiency. Obviously we're in a subsidized market. We're burning money, but can we burn less money per trip than our competitor? And if we can do that over the long term, as their business grows and as the market grows, they'll have to continue burning just to maintain their market share. So it becomes sort of a battle of attrition. So those were the key metrics that we looked at in the long term, and sort of eventually then you'll have some sort of M&A, and that's sort of what happened.
Okay, Warren, next question again for you, and you can choose to answer this or give me a $500 Uber coupon. So what happened? Why did you guys go for the merger? Everyone loved Uber here. Everyone loves Uber here. We are sad that Uber has exited the market or merged. So what happened there?
Yeah.
What went wrong with the execution? I'm more interested on the execution side.
So
$500 coupon?
Sorry?
You take the $500 coupon option?
Oh, I don't have coupon access anymore, sorry. Maybe I can get you a Grab coupon then. Or a Gruber.
It's all the same for me. Yeah, go ahead.
I think we essentially built this region from zero to a $2 billion company in itself. So I don't think there's sort of, a lot of people ask me like, oh, do you feel like you guys lost by selling your business? And I resoundingly don't think we lost at all. I think what we realized was that Uber as a company, we have a portfolio of businesses, 80 countries and 600 cities, and that's just our ride-sharing business. And there's Eats and other, smaller pieces of our product line that are becoming increasingly important. And I think in highly, highly competitive markets where a ride-sharing platform alone isn't enough to justify continued investment and will be very challenging to be, as a standalone, a very profitable business. I think that's sort of where our company, as we sort of move towards IPO, will start thinking about how we want to invest all our limited resources in all these different businesses in all these different countries. And I think one of the things that Gojek and Grab and some of these local unicorns have been able to do is initially Raise being the Uber of X, Y, and Z, but eventually pivoting into different business lines, into wallets, into payment mechanisms that are a great fit for Indonesia and Malaysia and some of these giant markets in Southeast Asia. And I think the US being, everyone has a credit card, even Apple Pay, all these big payment platforms haven't been able to sort of crack it and drive very strong adoption. Being an American-centric company, we're just not able to understand how relevant these local innovations are to a place like Indonesia. In the US, we're thinking about Uber Pool, how to squeeze more efficiency out of every single driver, how to stuff more drivers or riders into all these cars. But in Indonesia, Uber Pool just doesn't work. It'll take 45 minutes just to make a U-turn to go pick up another customer. So, the types of problems that the San Francisco tech team is thinking about and sees every day and lives and breathes are just so different. And it's very hard to realize how different it is unless, you've been on the ground here. So I think, that is sort of one of the biggest reasons, I think, why we decided to, take part in sort of the growth of a local player and their ability to sort of pivot and invest those local resources to understand all those local nuances by sort of, combining and being a partner with them.
Okay, Joel, next on you, right? Just picking up from that. So Groupon didn't do very well back in the US. What are you guys trying to do differently with a local flavor? Number one. And number two, just on the payment side, everybody is trying to get into payments. Karu Pay, Grab Pay, Fave Pay. Like, how are you thinking about entering this very competitive market and winning?
Yeah, so I think what Warren shared, I resonate strongly as well. I was in a position running the Asia business for Groupon, right? And we built it $2 billion as well in 4 years. But I think as a US company with a presence in Southeast Asia, it's very difficult because the landscape here is, a lot of things that they're doing in the US is not relevant in Southeast Asia. So that's why we bought back the business from Groupon. So I was running for 5 years and we acquired the entire business last year, right, to run it. So to give in context is a very similar business like Groupon that started in 2011 in China is called Meituan. So actually today they are the 4th largest internet company in China. I think they're going for IPO at $60 billion, right? So I think that's kind of how far, taking a clone, I think like what I mentioned initially, to fundraise and then building into a mutant could become in this region. And I think that's actually one recipe for not the only recipe, but there's one recipe for scaling up success. So for us, I think our positioning here is that mobile payments and it's going to be a big space here in Southeast Asia. I think following from China, a lot of investments are coming in this space. We are not positioned to be a wallet. We are not acquiring any licenses because there's enough licenses and enough money going to it. So our position is actually a wallet aggregator. So we aggregate all the different types of wallets because what's happening right now on the merchant side is 4 or 5 wallet companies are approaching them and they say, oh shit, it's like, how do I kind of accept all the different payment options? And then for the consumer side, it's the same thing. There's so many options. So we are just aggregating it, providing convenience to consumers and merchants, and then giving them the data between every single transaction. So that's kind of where we are positioned.
Sure. Cherilyn, I want to come to you next. So, having the advantage of hindsight, how would you have executed differently on ALN?
Okay. The funny thing about legal is similar in the telco industry, right? Where you're in this really huge area where, legal services are estimated to be about 400 billion in the next 3 to 5 years. And that's only targeting 20% of the Asian market. So if you take 100%, let's not even take 100%, right? If you take 50%, you're talking about, you can easily double that number by in the next 3 to 5 years. And that's what we're targeting, right? We want to be, actually what we aim to be is more of like being a Bloomberg of law. So that's where we want it to be. And what I started with at the beginning was a listing, because at that point in time, even having a listing is considered a disruption in the market. So imagine going towards like a Bloomberg of law would be totally unimaginable. So I remember going to the regulators with my slides, right, on what I was going to do with the ecosystem, and they had no comments. Like no one knew what I was trying to do. So so if I were to think about like the process of me getting to where I am here, every single point in time was actually buying time and buying confidence and buying trust from the ecosystem, which got us to where we are today. So I wouldn't say that I would change a lot in terms of like our strategy, because actually just this week I was referring to the slides I did 3 years ago when I went to the regulators, and we're still on track in terms of what we want to do. But what I would really change is how I view tech. So right now, our entire system is fully API. We have an entire full case and document management system that lies behind Asia Law Network. It's called Tesseract. It powers up all the law firms, not just in Singapore, but across Southeast Asia. It's in 10 languages. And if I had done the tech differently then, 3 years ago, I mean, right now, it takes me 10 minutes to start Quick Consult in a new country. So what we did was to start Quick Consult across 5 countries immediately, like 5 months ago, just to test the market, right? But if I had done this, 3 years ago, I could have gotten a lot more data and managed the requests a lot better at the beginning, and actually make better decisions along the way.
Sure. Okay, maybe I just want a one-word answer for this one. Growth or profit? All for a few. Let's go. Let's start with you, Warren. Let's not put Cherilyn on the spot. She wants to think.
Depends.
That's a very HBS answer or very B school answer. You have to choose one. You don't have the depends option.
I think it's an unfair question, I think. Yeah.
80-20.
80-20?
Yes.
All kinds of answers here.
Wow. How about you? At least one of you take a position.
At least contextual, right?
Oh my goodness. Okay, let's not delve deeper on this now. All right, maybe in the next 5 minutes, I just want to talk about the ASEAN startup landscape. We are seeing some very strong numbers. There's this Google Temasek report up on the screen, which talks about, the Southeast Asia economy reaching somewhere around 200 billion in 2025. It's already at 50 billion. So, do you guys see this opportunity in the region? Any one of you?
So I guess I'll just repeat just now what I said, right? Like the legal market is estimated to be 400 billion even before 2025. So that's way more than I guess the e-commerce markets that you see here. But the key...
Yeah, for the panelists, the e-commerce market is around 90 billion, online travel close to 76, and media and ride-hailing is 20 billion market each. Warren, you want to rethink Uber? 20 billion? Do you guys feel these numbers are true, they are conservative, they're optimistic? Do you see this kind of opportunity in the region?
I think just to say, I think any number, I think it's not the specific number, but I think if you, what I get excited by is that I think if you look at all of these industries, there's no clear winner yet, no matter what you think. Like in terms of, people think Gojek is in Asia and is really established. Well, they just have 16% share, by the way, in terms of actual payments that they do, which is nothing compared to the whole, and that's in metropolitans and their focus, and rural is another market and a different place. So pick any of those giants also. Still so much out there to be taken, and still no clear model. Like there's no Amazon in Southeast Asia yet, right? And people are starting to pick up the fight right now. A lot of Chinese people are coming and funding those fights, which is interesting. I think which will make it much more interesting. But I would say it's no matter what that number is, I think people believe, I believe it at least. But what surprises me more is that there's no clear winner and so much out there.
Sure.
These are believable numbers, but I think like the definition of ride hailing and what is in that category will be drastically different in 7, 8 years than it is today, as it was when we first started. So I don't think when this report was written, bike sharing was even a thing yet, or electric bike sharing, or all these other sort of modes of point-to-point transport. So I think it could be bigger than this, but what's in that category could be drastically different.
Sure. Okay. I think we are approaching the end of this panel. So let me just ask one more question. So what important truth about Southeast Asia do very few people agree with you on? We can start in any order. It's basically your position, controversial position, so to say, which people don't agree with you on, based on all your experience in this region. How about starting with Joel, you?
Hey, just give me 1 minute, right? I'm still thinking about it.
Okay. Anybody wants to take this?
Okay, so 3 years ago, we've started building our legs or like relationships around Southeast Asia, even though we knew we were not going there straight away. But law takes time, so we went around trying to grow the market and understand the market in Southeast Asia, because that's where we believe the growth will be. And what we realized, as opposed to what most people think, is that the other countries in Southeast Asia, other than Singapore, for example, are very much more difficult to go into. So give an example, right? For every 5,000 Google search in legal terms in Singapore, there's 600,000 in Thailand. So that's one thing that people might not think about. They'll think, hey, in Thailand, they probably don't even bother about their laws, for example. But that's what we all think, right? In Vietnam, and where in terms of the legal system is not as clear, right? But actually, what we don't realize is that if you don't actually go down and do the research, you don't realize that the people are even more aggressive when it comes to growing the markets online. And yes, so never overlook them. I mean, in terms of the market growth there, it's amazing. And that's one of the reasons why our focus isn't on, like, for example, the developed legal markets such as Hong Kong and Australia, even though we already have bases built there, but across Southeast Asia as well.
All right.
Finally.
Yeah, so I think philosophically, I always debate, maybe between my left and right brain around disruption versus collaboration, right? And I think that, people generally get excited about disruption. They say, oh, tech startups, disrupt. But a lot of it, I think, is overlooking the cost of disruption, right? Because in a market like Southeast Asia, it's extremely fragmented, and also there are a lot of business, because the laws are so different, businesses have been built over many years, right, with relationships and so on. I think a lot of times technology startups are better off collaborating than actually trying to disrupt, because you actually spend a lot more money burning to disrupt than collaborating with the ecosystem. So, and you've seen it, right, in kind of
people disagree with you on that?
Yeah, I think generally overall, I think when you start a tech startup, the sexy way is to try to think of yourself as a disruptor, trying to kind of, break the industry, you're kind of a hater to certain things, so you channel that energy, right, or the anger to kind of build whatever you're building. But the cost, a lot of times, outweighs the benefit in the long run, right? So I think collaboration, I think very similar in China, when I was talking to the founder of TT as well. Like, we had a short one-on-one, and she talked about this topic around how she wants to be more collaborative instead of disruption, because, you just create a lot more value, because if not, essentially, most tech companies are building a VC to C model. And I kind of joke with it to my investors. I say, we're not here to build a VC to C model, right? So you raise like we've raised, say, $20 million, it all flows to the consumer, right? And I think that's just really, I think it's not sustainable in the long run.
Warren, Mr. VC2C, what's your opinion?
So I think maybe this isn't that controversial anymore, but I think a few years ago, I think a lot of us would have agreed that the best startups are American, and they're the most innovative and most creative. But I think, witnessing this firsthand, I think there's so much more innovation coming out locally. And even though they might be copycats per se, they take the innovation to another level that American companies often can't keep up with. And I think another thing, this is probably a completely different issue, is just engineering resources and engineering know-how. In Silicon Valley, you can, the cost of an engineer for a mobile development is probably like $400,000 US or something ridiculous like that. And they'll worry about what kind of snacks they're serving in the pantry, and like make a fuss about that. And then in China you can hire 20 engineers, and they'll be working 24/7 around the clock. And that just tells me like there's this massive paradigm shift in how these economies are going to evolve.
Sure. Rameez, you have the last comment of the day. Make sure it's really good.
So I think, so we have so this is a very, unique, not unique, but at least my lens to this thing, because we are a consumer-focused business in this particular space. But what we were shocked about mostly is that when you look at the consumers, especially for digital services, whether it's like an internet service, retailing, e-commerce, or anything, the behavior of the consumer is actually surprisingly and shockingly similar, right? You may have variations around it, but it's actually, people say a lot about, geographies are different, and, things are different, and then language is different, and this is different. But, every single time we've tried some idea or tested some idea, it's actually, you take out that particular segment, which is usually 20-30% of the market now. So you can actually very quickly build and start a sustainable business that actually focuses on that segment, because it's actually, there's more things common in a person in Jakarta in that particular age group doing a job in a corporate whatever, than between that and the Singaporean who's doing the same thing here, versus between a Singaporean and a different class, right? So I think you can actually build international businesses much faster than people will tell you, right? And you can come around the details around regulation stuff. I mean, you can figure it out. At least it's easy. But if the product market fit doesn't exist, nothing else matters. And what I've been surprised about that it's actually there.
Sure. So on this very insightful comment, I think I'll close my line of questioning and we'll open up to the audience. If you have a question, please try and keep it very brief. Yeah.
Thank you very much for a very insightful panel. I have two quick questions. What were the regulatory challenges you faced and how did you overcome them? And the second question I had is, where did you get your coding and platform talent? Your coding and platform talent. So that's the second question. The first one is, what were the regulatory challenges you faced and how you overcame them? Thank you.
I think
To Cherilyn and also to you from Circles.
Rameez?
And then for the coding, I'd love to hear from Joel as well. Thank you.
Cool. So I'll answer the regulatory one. So at the beginning, so lawyers are not allowed to advertise, at least in Asia. Yes. So listing was considered like an advertisement of some sorts. And what we did was to compare it with something like Yellow Pages, which was accepted and widely accepted across all the industries. And we went on to the regulators very early on, and even before we launched the platform, we already told them we're going to do that. And how we gained the trust is basically at the beginning, I went around door knocking to all the law firms, and we got 1,000 of them on board. So that's 20% of the legal market in Singapore of practicing lawyers. So what we did was to go to the Law Society or the regulators and tell them, hey, if 1/5 of your members are needing this and they think that this is a good idea, then maybe it's something that we should explore. And I'm willing to explore this with you, provided that you give me some guidance in terms of what are the must-not-dos, right? I mean, things that we cannot do specifically. And we try to work out, some of the details with them together. So I guess the key thing is regulators are not there, at least in Singapore, they're not here to penalize ideas which are innovative or are helping the market in general. But what they need to know is, are the risks involved if we were to implement something so that it can have like some sort of control over the situation if it happens. So if you're dealing with technology that has to do what we call reg tech, so I mean, best is really go forward to the regulators and work things out together. The earlier they know that something is happening, the earlier they can be prepared, or you can prepare them in terms of what is going to happen. So there's less friction around what you're trying to launch.
Not much to add to that. I think the only thing I would say is take a collaborative approach with the regulator these days, probably advisable. And I think what they care about is as you mentioned, I think the key thing is to give them a heads up. I don't think you should build a business dependent on a regulator. That's because they'll never change the world for you, so your business exists. But at the same time, if you can lead them a little bit, guide them a little bit, that this is what's going to happen, that's why we're doing this, then I think generally regulators, I felt, again, this is versus 10 years ago, I think they've also opened up to sort of the need for the innovation, talking to young startups, and at least having a discussion. And as long as you can do that, I think they'll support the idea broadly. And like you said, make sure that they feel like they're in control and that they can have control over a situation if something goes wrong.
Yeah, I think just to quickly answer on technical talent, I think there are two phases in a startup. So one is the early phase. So I think a very realistic view is that usually you won't be able to pay them very well. So so you'll find groups of people who are passionate about technology in like different community meetups, right? So I think going there, meeting people, sharing a vision, finding like-minded folks who are willing to kind of work for nothing, right? To build a startup with you and take equity share is probably the way to start, right? Going on LinkedIn and trying to find engineers is not going to be a good start because because initially we won't have capital, right, to even pay them. So and then once you've got the founding team, which usually would come from these communities, then you can start to hire people when you fundraise.
Hi everyone, this is Zach running a fintech startup here in Singapore. And I just want to continue with the first question asked just now. Because Actually, for me, I'm been into the fintech industry, and we have been the market leader in the Singapore market. But one of the key issues when we do the market expansion, especially in Southeast Asia, it's about the localization part. And for my industry, fintech, actually, one of the key roles is the government. What's the role of the government is playing in different countries? For example, one of their role is playing as a regulator. But another role, maybe the government can also play a role of like can help you to bring your solution to the awareness or the kind of like an infrastructure in that country. So my question for the fellow speakers is about how do you think actually it's the most important role when you're doing the localization in the different Southeast Asia country?
Very difficult question. Just so I understand. That's right. I'll do that next time. So I think just so I understand the question, is the question around what role can the government or the regulator play in your mission to go overseas?
Well, because I think in different industry actually got a few different barriers in terms of the government issues. For example, let's say in the payment industry, the license could be one of the issue, sure. And also let's say Uber, like the railroading industry, also the license could be one of the issue, and for the telecom, this one also. So actually, sometimes the people like Grab, they cannot. Like in Indonesia markets, they cannot get a license itself. So the only way that they can work is to partner with someone with the license. So this is a very critical issue when you do the market expansion in Southeast Asia. Because I think since we have very honored to have speakers here today that you all have some experience in the regional market. So maybe I want to hear more about your opinions about this.
I'll make an attempt to answer that question if I understood correctly. And I think key is, I think first you have to understand, I think it goes back to the product market fix. If you think your product will work there, then I think work backwards from that and do whatever you need to do to make it happen. Frankly, that's my advice. So don't depend on the regulator to make it happen for you, because that's never going to work. That's a direct opinion, but you can take it or leave it. But it's actually very rare that they will do something to make something happen. So now, does that mean that you work with a local entity, pick one of the local banks, or even someone as a local family? It's an Indonesia model, works very well sometimes, to get some sort of protection, some sort of coverage, whatever you need to make it happen. But I would say to depend on the regulator is a pretty difficult path to follow. So either you have to break the rules, or you have to work with them, or you have to work with the local party, but I think work backwards from there.
So maybe just to share an experience, because for every single market that we go to, we have to go in with the regulator, because we want to be responsible providers of linking people to the right lawyers. So what we're doing is actually acquiring units in these countries where they already, for example, have the license to operate, or they have been operating in the space and they understand the business. So you can find similar companies that are already doing something similar as yours, but maybe smaller. And you can look to either acquiring them or working with them, signing a partnership or a JV kind of arrangement. So indirectly, you're actually owning the licenses to operate, and then you can grow from there.
Yes, we can have one more question, and then panelists will be around for some time, and you can ask a question. So one last question there.
I've got a question for Rameez. I understand that Circles.Life is a virtual network. So you had to go to the incumbents, your future competitors, and buy capacity from them. I was wondering what these conversations were like and how you actually convince an incumbent to help you, which might also be applicable, say, in fintech, if you want the banks to help you or something like that.
So I think it's much easier these days to go to larger companies and say, so if Grab was just starting off and then went to Comfort, I'm pretty sure they'll partner with Comfort, right? And I think Grab did go to Comfort 4 years ago, and Comfort refused to even entertain them in a meeting. Right? So I think first of all, you have to look at big companies who are looking into this future, and a lot of these people are saying, you know what, we know what the writing's on the wall, and maybe we don't have the capabilities to figure this future out. So instead of just refusing this future so someone else takes it, why don't I partner and actually take part in this thing? So the conversations on a strategic level are much more easier, I guess, compared to like many years ago. In our particular case, it's actually a financial argument too that is much stronger, because they've already invested in the infrastructure, right? So if they make any money out of me, that's extra going directly to the bottom line, right? So strategically, they're much more aligned to sort of saying, okay, let me participate in this future a little bit rather than just waiting it out and getting someone else to disrupt it anyway. And the second argument is, I also make a lot of money in this process without any additional cost.
So if I can follow up on that. Was your strategy sort of to talk to all of them and almost play them against each other a little bit? Who gives you the best deal? Or is it more that you build a relationship with one of them and kind of do that over time?
I think it's a combination. I think usually the number one player doesn't necessarily want to innovate the market. That's very easy. So that conversation is very short. And I guess I understand that. But I think usually the second, third, fourth players, depending on the market, all want to a little bit in the pie, especially if they think that you're bringing something unique to the table.
Thank you.
Yeah, sorry, I just want to add one point on regulators, right? Because I kind of thought about it, and I find that if at any point, if you as a startup, you need to actually engage with regulators, most likely you are kind of late in the game. Because a lot of time regulators come in when the industry is sort of like sizable, right? When they kind of see something that's brewing, right? So a lot of times, even in all the startups I built, I actually don't encounter regulators until a much later stage, right? So let's say the bike sharing startups, you just bring like thousands of bikes, right? And then one day the government say, oh shit, it's like, there's a bike right outside my house. I can't even drive out my house, right? They say, okay, let's start regulating it, right? And I think similarly Uber, right? You just go, right? You just do it first. Because by the time if you are encountering regulators, most likely there are incumbents, there are startups that are at scale, which means that you're probably late, which means as a startup, it's actually not a good position to be in. I thought that was...
Yes, thanks, Joe.
Sure, guys. If you have more questions, we'll hang around. I think I'd like to call Stephen or Jonathan for the lucky draw. Good luck, guys.
So has everybody put in the card in, or does somebody want to put in? So going with the smaller one or the first one?
Yeah, if you still want to participate,
Okay,
put your
so-
card in.
So there are two prizes tonight.
You guys want to participate?
Guys, thanks for letting us let you drink.
Take the card out. Yeah, you got to pick. So wait. So there are two prizes. So for one of them, the first one is the small one. So that's the runners up.
Cherilyn, I want this one. You pick my card.
Okay.
This one.
So these are whiskey glasses. It's fine. So for the second prize,
Who's getting drunk?
Hey, we need drum roll.
wow,
Wow.
the rich guy is becoming richer. So somebody from JP Morgan, Lee Ken. So the next one is a bottle of whiskey. That's the final one. So I'm putting the card in. No, go ahead. Wow. That's the Uber guy. Who young?
So guys, Uber guys still exist. And they really need this bottle.
Yeah.
All right, thanks everyone.
So thank you for coming tonight. I hope you all enjoyed it, and we hope to see you again. Thank you.
We'll hang out a little bit, and please feel to have some more beers outside.